Watch out for hot coffee. It's already rallied from 120 to over 150. Is coffee going to continue to pump, or is it time for hot coffee to cool down? This and more in this video. Welcome to myfinancesteacher.org. Just a quick reminder, don't take this as a formal investment advice. I simply share my opinion of what's likely to happen over the next few days and over the next few weeks based on probabilities and a range of factors affecting those probabilities. So starting with what do I see on the technicals of the chart itself? As you see over here, I think the chart is showing us some sort of an ascending triangle. Statistically, ascending triangles usually break to the upside rather than to the downside. So that's the first reason why I think coffee is likely to push a little bit higher, perhaps just over the next few days. And what's likely to help it is dollar, which has been dropping significantly over the last few weeks. You can have a look at a chart of DXY and it doesn't look pretty. Perhaps if that drop continues, that will help coffee to poke once again above those Bollinger Bands, poke for one last time before going down into the cycle low. And we'll talk about the cycles relatively soon. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. The second reason though why I think coffee might poke once more a little bit higher is that if you zoom out on the weekly chart, there's a long-term support zone from early 2017, from January 2017, at around $157. And coffee came relatively close back a few days ago to that number. So as we are really close to that long-term resistance zone, I think that's going to pull the price somewhat magnetically to break above this ascending triangle and to test that resistance zone a little bit more convincingly than coffee did over here on the 20th of May, when it gave us a recent high at around 153.6. Another reason why I think coffee might continue higher for just another few days before smashing down quite a lot is the duration of the cycles. Again, if you zoom out a little bit, you'll notice that cycles usually last for, well, that's around 4.5 months, well under 5 months, although sometimes those cycles can be even shorter, as in late 2019, for example, or late 2018, cycles lasted for only about 3 months. But on average, over the last few years, the average duration of the cycle is 145 days actually, but let's just call it around 4.5 months. And the ongoing cycle so far is only 50 days old. So for that reason, I think while there is a chance that coffee already gave us a high for this cycle only about 45 days into this ongoing cycle, I think it's perhaps a little bit more likely that coffee will continue just a little bit higher over the next few days to perhaps give us a cycle high somewhere around 2 months into the ongoing cycle before starting the declining phase of this ongoing cycle. So as the members at myfinancesteacher.org know, I currently don't have any positions on coffee, and I really want to be very cautious on coffee right now. One more thing while we're on this chart is RSI. It has already dipped into overbought area a couple of times during this recent rally, and while that was pretty early in the ongoing cycle, that was only about 1 month into the cycle when we saw these overbought areas on RSI, I think there is perhaps one more chance for RSI to poke a little bit higher before again dropping into that cycle low. And now we can move on from this chart to the chart of seasonality. Although, to be honest, personally, I don't really like to pay too much attention to seasonality. Perhaps I'm missing something, but I haven't really noticed that seasonality has played out as a more or less reliable indicator of what might happen to the price chart. Nevertheless, as you see from this seasonality chart, June is often a terrible month for coffee prices. So again, a lot of caution is currently advised. Next, let's move on to the COT reports, Commitment of Traders reports on coffee. And first, let's look at the bottom part of this chart. The green line is the commitment of speculators, who are often called dumb money. And the red line is the commitment of commercials, the positions of commercials, who are often called the smart money. The green line, the speculators, are often called the dumb money because, as you will notice, the bottoms in this green line coincide with the bottoms in the price chart, meaning that the positions of the speculators are the lowest whenever the price is at the lows. But actually, you perhaps want to have higher positions when the price is bottoming out. The commercials are often called the smart money, and as you will notice, the red line often moves opposite to the price chart. Whenever the price chart is bottoming out, that's when the commercials have relatively high positions, and that's what you generally want to do if you want to make money. And when the price is quite high, as well, let's say over here in September last year, that's when the commercials have relatively low positions. That's when the red line is bottoming out. And what do you know? Looking at the positions right now, the commercials are at their highest level of commitment all the way since at least September last year, or perhaps even longer. And similarly, the commercials have their lowest positions right now since at least September last year, or perhaps again even longer. So although coffee might continue a little bit higher, I think generally one should be very cautious right now. And lastly, let's have a look at what I think is the most important chart, the chart of Optimism Index. Because as I've mentioned many times in my previous videos, you perhaps want to start accumulating some long positions when there is, so to speak, blood on the streets, when nobody really wants the asset that you're looking at. And looking at the history of several years, usually the price of coffee is bottoming out when this Optimism Index is near the floor, when nobody is optimistic, when everybody is really pessimistic about coffee. That's when this Optimism Index is close to this green line. But actually, since 2020, in the first half of 2020, price used to bottom out when this Optimism Index didn't actually drop all the way to the green line, but instead it only dropped down to low 30s. And on top of that, since late 2020 and into this year, price actually has bottomed out when this Optimism Index didn't even drop down to 30s. Instead, Optimism Index was close to 40s when the price was bottoming out. Why is that? Who knows? Perhaps printing those trillions and trillions more, and a bit more trillions of dollars and other currencies doesn't actually allow commodities to cool down properly. But nevertheless, if you look at what's happening right now, although recently Optimism Index did drop all the way down to 59, that's nowhere near close enough for a nice buying opportunity. And now this index is back up at 65, close to this red line. Red meaning danger. You again want to be really cautious on coffee. Don't burn yourself with that hot coffee. So to summarize all of this video in one sentence, would you like some coffee? No thanks. And that is all from me. Now back to you. What do you think of coffee? What do you think of this analysis? Share your opinion in the comments below. Remember to hit that like button, subscribe to the channel, and share this video with your friends. For now though, I wish you a wonderful day and good luck in your trades.